Howdy, 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 everybody. Tim Knight here, and it is time for the wonderful world of charting. The market's really funny right now because, and I've done this a long time. I've been trading for decades, and I know the nature of where we're at right now because, the market will sell off and sell off and sell off and sell off, and even people like me will be like, maybe I should buy some stuff, or maybe I should and not some stuff, but usually maybe I should buy a huge block of spiders, or cubes or something, either to hedge or even, because I think a big bounce is ahead. And it's very alluring. There's this siren song drawing you in. And they got me this morning because I tried 2 or 3 times to jump into IWM, lost every time, every single time, just cut, okay, never mind. And I came close to it about 10 minutes ago, or even 5 minutes ago, because everything was powering higher again. It's come on, the water's fine. And this time I'm like, no, I don't think so. And we're red again. So, bottoms, even short-term bottoms, take a little time. People might just be a little jumpy about tomorrow's CPI because with all the other bad news going on, if inflation comes in white hot or even somewhat hot, that could give people a new reason to freak out because, the psychology of the market has changed a lot because for years it was just relentless lifetime highs. And it's how can it go up anymore? And people have become very accustomed to that. And it's an odd feeling for people to have any fear. But the VIX has blown to the kinds of levels we normally see with the termination of a drop, kind of the upper 20s zone. But I think I want to get the CPI out of the way first. For myself, I tend to be kind of a bottoms-up style trader. I focus just on individual charts and individual stop levels, as opposed to, broadly speaking, I believe the market's going to go up or down. And that keeps me relatively sane because I can just kind of break down the granularity of the decisions into instead of just the macro up or down, just here's these 17 positions and just kind of surgically tend to each of those. And we'll see a couple of those today. So let's just jump in here and kind of catch up. We begin with a spider, which hasn't been really this pounded since back in last July. We had this chunk where we went from July 16 down to August 5th. So a couple of weeks. And in this instance, we peaked lifetime high at February 19. And here we are on March 11, a little bit longer, about 2.5 weeks so far. But, this is, even if we've seen the lifetime highs for all of our natural lives, it just doesn't just go down every single day. I mean, there's going to be lots of bounces along the way. So people ask themselves, is this equal to, say, this right here when stocks are relatively cheap compared to where they're going? So that's what folks struggle with. For myself, resistance really isn't until up here. And, little did we know, last Friday, just a couple of trading days ago, stocks are still pretty expensive, even though they seem to have been battered already. And on Friday, I was really worried, is this all we're going to get? Well, clearly not. Yesterday, we plunged big. Today, we fell to even new lows for this chunk. And we basically unwound back to early September, long before the election took place. Here's the diamonds, which kind of gave up the ghost. They have been for 1, 2, 3, 4 days holding firm at this line. That changed yesterday. It broke down and it broke down even more here. And we can see this also illustrated in terms of the industrials breakdown with XLI, in which we've finally broken for the first time ever this pattern. So this pattern is complete. We're in it now. We're probably not going to close below it, but we have punctured the base of that pattern. Overseas, Brazil, EWZ. Speaking of siren songs, I'm into these puts again. And so long as we don't get above 24.91, content with that because this is one of my favorite patterns. And China FXI is rather strong, up about 1.33%. And it's a little tough to read the resistance on this one. It could be as low as 36.90. If you want to be a little more generous, we could kick it up to more like this level, which is 37.48. But clearly this is very dependent upon the whole back and forth, back and forth, back and forth tariff stuff, as well as China's own economy, which isn't doing great. I think a good illustration of how swiftly things change is Meta, because back here, leading up into the 14th of February, there were 20 consecutive up days, 20 days in a row of net gains, which is incredible. And as I've mentioned from time to time, don't let the red bars throw you, because those don't necessarily mean the day was down. It's just a candlestick. It simply illustrates the difference between the open and the close. It has nothing to do with the net day-to-day change. So the net's day-to-day change for 20 days was up 20 days in a row. Can you imagine flipping a coin 20 times and having heads every time? That's kind of what happened. Well, that didn't last. As you can see, we got kind of an upside down V here. So all that juicy stuff that started on Jan 14 has been completely unwound for Meta, which I think amongst the Mag 7 is still the top performing stock. Tesla, of course, way at the bottom. Here's SMH, which is up. And this is the kind of thing which is tempting to think about in terms of bounce. In fact, as an individual stock, one security that seems just so trashed it can't get trashed anymore is on Semiconductor, symbol ON. I was thinking about buying that one because it's just so smushed. And even earlier today, when we were down across the board, the semiconductors kind of aren't having any more of it. You know, they're sort of, you know, they're dead already. So they're the first to spring to life. And yeah, I would not go near any sort of semi-short these days. It was great a few weeks ago, but not anymore. You can see, and this is one of those big fish that got away, what a magnificent trade this would have been. This is SOXL. This is a leveraged ETF for semiconductors. There's a gap here. The gap itself was at 32.31. We fell and climb right there. There's a Feb 20. So the gap was closed and a little bit more. 32.64 was the peak for the day, and then plunge-a-rooney. And so from there, we went from 32 down to today, we were at 16. 50% drop. 50% drop in just over 2 weeks. Of course, it's leveraged, so you're kind of playing with fire. But you know, even at this, I can back all the way out to its entire history, and you can see what a monster drop that is. Haven't seen anything that sharp since COVID. So yeah, semi's in bad shape. Transports, very weak today. I didn't have time to look, but I think the airliners got zapped. And you can see here that it was not that long ago. These were also at lifetime highs around about Thanksgiving. IYT was over 75. It's about $10 lower than that now. So about 13% drop. Big plunge today. Even though at the moment, like the NQ's up, RTY's up about 0.5%. Transport's quite weak. And again, I don't know who the culprits are, but I know, for example, Delta is down quite hard, over 7%. And you can see how much things have changed. Here again, it wasn't that long ago that this had all the markings of a good, strong, bullish breakout. And it was. But what happened? And the first huge warning sign was that this gap was sealed. The next big red flag was that it got below this low. And of course, once we penetrated the pattern again, it was, wow, toast. XLU, I still really like the CTF on the short side. We have, you know me, I'm a little bit lazy about drawing diamonds. This is an oval, but it's really a diamond pattern. And about halfway up there, halfway up the egg, we've got this line, which is pretty much today's high and yesterday's high. That's a pretty good stop loss, I would say. And I think this is, even though the market in general has been beaten down a lot, XLU is kind of a little creature unto itself. And I think this has every good chance of flipping lower. One item that's proved that nicely is NEE. Yesterday, this went raging higher, but look what it did. Here's the trend line. Here's the break. We approached it here and backed away. And yesterday we approached it here, backed away. So this line's proving quite formidable with respect to its resistance powers. Um, just a few odds and ends here. As I said, I've got a bunch of short positions right now, 17, I think. Here's a couple or three that I like that I don't think I featured. BG, there's the symbol here. There's the broken trend line. Here's the completed pattern. And this security appears to have a tendency to respect its topping patterns. And this is the biggest one by far it's ever seen in its history. So even on this rather green day, we're down 1 2/3 on BG. Wendy's, another diamond pattern, and tightening up the stop loss here like so, 15.94. This one's down by 0.5%. And this one, MDLZ, I finally, not finally, it was just yesterday, but this one had been very, very strong. I'd gotten out of it. I got back in again yesterday. We had a beautiful shooting star on this. I got just a little bit above this trend line, but as you can see, this trend line here has been broken and by a lot, and we've pushed all the way back to it. Seems like a pretty appealing risk-reward ratio at these levels. So that's just a few of those positions. I'm not in Reddit, but boy, is that a pretty one. It's bouncing back now. It's up 12.5%. But in this instance, this had lost, as of yesterday, about half its value. There's the gap on it. We'll just get rid of that. That'll do. That's good enough. We keep things simple here. So here's the breakout here. So this is a strong support, and this is strong resistance. So we've moved, and this is very typical. About mid-February, things seem to have topped out, and kind of the smaller, sassier stocks, the worse they got hit. So yeah, I read it down about 50%. Tesla is having a rare green day. The president announced that he was going to buy a car. He was sick and tired of all this craziness going with Tesla, so he decided to show his support. That's fine. I've owned Tesla cars since 2012. There's 3 parked out right now in front. So I'm a long-time fan of Tesla vehicles. And yeah, I just got just beaten to pieces. And a lot of people who are rather defensive about the stock point out correctly that it's had 50% wipeouts at least twice before. And it tends to spring back from those. It's a very volatile creature long-term. It doesn't really take much of the pain away from a 50% drop. But this has been very weak. And we have violated fib after fib after fib. At this point, what I would say is, should this thing rally to anywhere in this zone, let's call it 248, kind of split the difference. That's probably about all it's going to bounce. And I would also say that its competitors, its upstart competitors, are just get the death watch out, honestly. Rivian and Lucid, times have changed. And yeah, I think they're in trouble. I'm guessing perhaps they'll get bought up at some point. Who knows? But those are dreadful stocks. I kind of beat the semiconductor thing to death already, but just one other one, ARM Holdings, ARM. You can see just how tremendously this has dropped. Here we are again, those February peaks. We went from about 173 down to 113. But as I mentioned weeks ago, I quit trading this just because it was too erratic. Here's an oldie but a goodie. Remember this one? This is our ratio chart. XME miners divided by GDX, precious metals miners. And I've shown you this a number of times, initially like probably a year ago. And the idea is basically over the long haul, this ratio tends to stay in this range. Wow, it's working out great, isn't it? Look at this. Here's the peak, and it's just been getting battered down. And I would say we've probably got years left of this thing to work lower. It's a slow one. Just to wrap up real quick, and just, I don't use indicators much, but let's just sauce things up here with some exponential moving averages, just to show you how sold off things are. I'm being careful not to use the word oversold. Just let's look at these. This IWM got a crossover here. And we're deep, deep down. Typically, it got just right toward that 200-day and bounced. Not this time. So if it did bounce, and it could bounce mightily tomorrow. I will not like that, but that is the cold fact of the matter. It could bounce very strong. As I said yesterday, probably aiming for that pink zone there.